So I'm going to introduce you to the panel. So over to you first, Alex, who's from JP Morgan.
Yep, thank you, Jenya. So very pleased to be here. My name's Alex Loyden. I'm part of the Global Clearing Product Management team within JP Morgan Payments. Within region, I'm responsible for a number of products, the largest of which is our direct Euro clearing services, which are provided to financial institutions as well as other wholesale clients.
Wonderful, thank you. And over to you, Vitus.
Yes, thank you, welcome. My name is Vitus Rotzer. I'm leading the financial messaging product line within Bottomline.
Great, and Annick?
My name is Annick Moes. I'm here today for the Euro Banking Association and also with a little bit of a EBA clearing hat on the side in case any questions come up on that ground. And I'm in charge of industry issues and cooperation initiatives, so market practices basically at you.
Wonderful. We've got two for the price of one with you, Annick. Over to you, Francois.
Good morning, Xenia. Good morning, everyone. And thank you for having me. So my role, I'm head of payments go-to-market for the EMEA region. So what does that mean? We support and we execute our payment strategy on the EMEA region. So we support our EMEA clients with their payments business transformation. Happy to be here.
Excellent. Well, wonderful. I'm sure you'll agree, a great panel. That's over to you, please, Francois. What's the current state of cross-border payments globally, and how's it evolved over the last 5 years?
Yeah, thank you, Xenia. So you mentioned the number. It's such a big number, it's difficult to recall. 330 trillion by 2032, correct? Right?
Yeah, I've heard larger numbers as well.
So today we sit around 200 trillion, according to FXC Intelligence 2024 data. And what we've seen, what we have observed over the last years is really an acceleration in terms of payments growth. Obviously, we live now in a post-pandemic era, so really saw an acceleration of the digitalization of payments, but also resiliency when it comes to global trade, despite the geopolitical landscape. So for the next 5 years, we expect a slowdown. According to the same institute, FXC Intelligence, we're talking about 6% compound annual growth rate for the next 5 years, which will get us to still these big numbers. So I think there's still some interesting growth to capture, and maybe to last. Maybe going back on the five last years on the SWIFT network, we've still witnessed double-digit growth on our traffic data. Obviously, not only payments; it's across payment, securities, trade, and FX. But that's a bit what we have witnessed over the last couple of years.
Okay, so that's interesting. There's some good statistics there. I'm going to come to you now, Vitus. So how does cross-border payments volume and value compare across regions? You know, is there a front runner? And I'll just point out at this stage, for Bottomline, we can talk about volume. Can't talk about value, so we're using other statistics apart from our own for this. But over to you, please, Vitus.
Yes, thank you. So I would say that there are effectively different statistics, and we can read the different report on that. But what we can see is that North America will be leading in terms of amount, in terms of cross-border payment.
In terms of the value, right.
Yeah, and the APAC region is leading in terms of number of transactions. Behind that, we have Europe, and then we have Latin America, Africa, and Middle East. So that's basically the consensus that we can find in the different reports about this subject. So clearly, high value comes more from high value payment, cross-border payment from North America, number of transactions in the APAC region.
Okay, great. And I'm sure I'm always talking about APAC and the and the volume there. So I'm just going to move to. We've done the poll question. I'm just going to pull this up so you can all see it, because we're now going to get into the nitty-gritty and actually look at these objectives. So I'm going to start first of all with you, please, Alex. What's JP Morgan's strategy to meet these G20 targets?
Yeah, so our strategy is to constantly seek opportunities to both develop our existing services, but also develop new products and solutions for our customers that align to the key G20 goals that you can see there. I think there's evidence of that across our organization. So if you look operationally in the work we've done over the last few years, adopting new technologies such as AI and machine learning to realize cost efficiencies and increase speed, whether it's in product development, where we're developing solutions that provide extended processing hours to our customers, and from a industry participation in initiatives such as Partior, the recently announced Swift Digital, whose objectives align to the goals of the G20. And last but not least, our promotion and adoption of ISO 20022 standards to help with all of, as we'll talk about further, achieve those goals.
Yeah, excellent. So pretty comprehensive plan. And then so Annick, and I'm going to move to a slide actually here to support you. So Annick, which items do the EBA members see as critical in the pursuit of the G20 cross-border payments initiative goal?
Yeah, I basically brought this slide, Jenya, just to add another layer of complexity here. I mean, if you look at that famous circle that you just showed before with the 4 targets, that's already a lot to reckon with. But then if you look actually at the plethora of solutions that claim that they can solve this, you're bound to really lose your footage and your bearings even more quickly. And so what we did was indeed a stock-taking exercise, and we looked both at initiatives like processing solutions, so more comprehensive things at infrastructure level that would help members. But what we brought here to the fore is the contributors, so the enablers that actually often cover specific items that are also relevant for achieving these targets. And we wanted to know from our members, well, which of these do you actually think will make a tangible difference? And as you can see here clearly, the OCT INST scheme was seen as probably the most promising factor, but obviously also the ISO 20022 IP Plus adoption is a huge step forward in terms of speed for sure, but also some of the other targets. And then obviously there are a lot of specific fit-for-purpose SWIFT solutions. I mean, just to mention GPI on the transparency bit, that can really, if combined with some of the other contributors, bring us a great deal forward in the industry.
I think that's fair enough, absolutely. It's a combination of solutions. Sorry, Francois.
Yeah,
yes.
if I can react, because there are many SWIFT initiatives on the slide, and I fully agree with your point, Annick, and the G20 agenda is multidimensional, so there's unfortunately not one solution available off the shelf that will make the industry complying with them. So yeah, I think all of them are important. There's even more coming up. You will need to also probably run a new survey with the news of the week. But yeah. Nutshell, fully agree with you, and it's multidimensional.
Well, we're used to being agile in payments, so we've got busy roadmaps, but they're going to be even busier. Fair enough. Actually, back to you, Francois. So how is the industry tracking in meeting these G20 cross-border payment targets? And, what's standing in their way? Why can't we say, tick, 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 tick right now? Yeah. Why do we have to wait till 2027? 2030? Yeah,
so good question, and you know that SWIFT is very committed to the G20 targets and very and is willing to support the community to get there. As you know, we're sitting on some interesting data that we would like to leverage, and we want to make it benefit to the community. We've shared it. We've shared some data across the week. I'll remind a few of them, especially on some of the G20 elements. So regarding speed, today we see that on the network, only 46% of the payments that are processed on our network are meeting the speed G20 target of 1 hour, within 1 hour. So still some work to be done. Now, if you want to also address this, you need to break it down a bit further and see where the friction is happening, where is most of the time happening. And when we break it down, we see that typically the time it takes to get to the beneficiary bank, so to the last institution, is pretty minimal. So we now see that 75% of the transactions reach the beneficiary bank within 10 minutes. So where most of the time is spent is really on what we call the last mile settlement. So it's more or less, in average, 80% of the time is spent there. So what we've been doing with the team we did a big exercise during the first half of the year. So we went and we visited our 40 biggest markets in terms of volumes, and we organized workshops with our banks, JP Morgan obviously, but many others, 215 institutions in total, and so to understand really what is leading to this friction. So some are bank specific, some are market specific, and some are really, you can see them over the globe. So we issued a paper this week. It's called Spotlight on Speed. So I invite you to download it. But just in a nutshell, so we categorize the friction area in 4 big groups. So first of all, there are some regulatory requirements that have an impact on speed. We don't say it's bad, but we need to acknowledge that they are there, and we need to see and work probably better with the public sector. There are a lot that is to do with the operational processes of the banks. We see banks are still very much used to the promise of, let's say, same-day value transfer, but it's not meeting the G20 targets, but to start with, but definitely not the customer expectation. Third one is dependency on legacy technology, batch processing, etc. And the last one is specific market practice. So that are impacting this. Now, so this is for speed. 2 more statistics, which, let's say, show us that we are closer to the objectives in terms of transparency. Today, 87% of our transaction can be tracked end-to-end up to the confirmation that it was delivered to the beneficiary. Unfortunately, it's not shown enough to the end user. And when it comes to cost transparency, we see today that, unlike some of the myths, more than 70% of our transactions arrive to the beneficiary with the principal amount protected, so with the guarantee that the full amount is being delivered. So that's a bit where the industry is. So a bit of some good news and less good ones, but we're committed to work not only with the banks, but also with the entire ecosystem, market infrastructures, obviously, and public sector.
I think that's, you're right, it's a mixed bag, but we're optimistic. And, I think it is, I mentioned in the opening statement, it is about cooperation. It's about, regulation is a friend. It's definitely not a foe. It's going to drive best practice. It's going to drive standardization. So if we all work together in this proper education, as long as we know what we're not doing right, that, and we know what our objective is, it's when people are like, oh, how are we going to solve it, when it becomes difficult.